Okay, welcome everyone. This is Scott here again with a new video to help you learn how to trade, invest, and master your finances so you can apply that knowledge in the real world and multiply your money. And today's video is video 5 of my live option trading series, and it looks like the meme stocks are back. Right, so AMC, GameStop, BlackBerry, Virgin Galactic, all these meme stocks that had short squeezes in the recent past are now going up by huge amounts once again. And yay for me, because I sold some naked call options on Virgin Galactic a few days ago, before all this happened. And so I'll definitely talk a lot more about that in a minute here, but before we get started, as always, for those of you who are new to the channel, I just want to let you know that I do also teach on SKILLSHARE, where you can take my very in-depth classes on options trading and stock market investing. And I provided some links to some of the introductory courses of mine in the description of this video below. So be sure to check them out, and when you sign up for Skillshare using any of those links, you'll get a 2-week free trial. Okay, so now diving in here, let's go back to the monitor tab and take a look at some of these pretty atrocious positions here. So as I mentioned, I did sell 2 naked call options on Virgin Galactic. These are 30 strike call options expiring in July. And so far, it's been a great trade because I'm currently down almost $900. Totally awesome. And I do also have some other new positions in CLF, TAL, and Roblox. So at this point, I'm going to play a few clips that I recorded from this past week that will show you how I went about making these trades in the present moment. Okay, so today is Monday, May 24th, and I first want to give you a quick update here in regards to my Stitch Fix and US Steel positions. I did take them off today and did so for losses, and that's just because I have been tinkering and adjusting my current approach with buying and shorting stock as hedges for these naked option strategies. And since I changed things a bit after I put on these trades, I did want to start with a clean slate. So yes, these trades could have still been profitable by the expiration date in about 4 weeks, but I already did take on some losses on US Steel and Stitch Fix, and these 2 positions were not looking that good. And so again, I just wanted to start off with a clean slate. But I still do have my Western Digital, Palantir, and FCX strangles on. Those are all looking pretty good at the moment. And I will be managing these trades in according to my latest approach using stock as a hedge, and specifically, I will not be hedging any of these positions with stock until my break-even points get breached. So I just want to give the stock as much freedom to move and even go beyond my strikes a little bit before I even touch the trade at all. And so given that I've taken off Stitch Fix and US Steel, this obviously leaves me with some spare capital that I can now deploy for new trades. And so now if I come over to the charts, this is CLF, Cleveland Cliffs Incorporated. It's also in the steel production space. It's basically an iron ore mining company. And the implied volatility for CLF isn't that great. If I expand this up a little bit here, it is contracting a bit, as you can see, but overall it is still pretty elevated. The IV rank is at 36%, IV percentile is at 41, not bad. Ideally, I would want the IV percentile to be above 50, but close enough. And the actual value of implied volatility at 74% is pretty high for most stocks. And so now if I zoom in on the charts here a bit, you can see as of late, CLF has been going through a bit of a sell-off, but now in my view, it has reached a support level along this trend line here. And I believe I can actually draw this trend line for you so you can see it better. I'll go to drawing tools and then go to trend line. I can just click here and drag this over here like that. And so now you can see in this red line, this red trend line I drew, there are multiple places in the past where CLF used this point as support. And so this morning I was waiting to see, now that CLF has come down to this point again, I was waiting to see what it would do, if it would break below, or if this trend line would still hold, and if CLF would rally off of it. And that's what's happening now. So at this point, I think CLF could bounce and go significantly higher, and as a result, I want to sell some out-of-the-money put options here. And so we'll go over to the trade tab now and take a look at the option chain on CLF. And I'm now in the July expiration cycle. These options expire in 53 days from today. And now looking at the put options, I'm thinking of selling 2 of these 18 strike put options here. So these are only slightly out of the money, only by 20 cents. And I'm going pretty close in because I do want to collect more in credit. And also I do want to get very bullish exposure on this stock. So the delta for these options is 43, which means if I am correct, and over the next few days or weeks, if CLF does rally off that support level, I should make very, very quick profits here. So I'll go ahead and click on the bid price to bring up the sell order. I'm going to sell 2 of these contracts for about 170 bucks a piece. So that would be 340 bucks in credit in total. We'll go to confirm and send, take a look at the buying power effect, just under 700 bucks. That's totally fine. And then we'll go to send. And there we go, got filled immediately at 172. Very nice. And so now the next step is going to be setting up my automatic GTC closing order to take profits if I am actually correct on this trade. So now I'll click on the asking price to bring up a buy order. And again, I'll buy back 2 contracts. And so given that I usually take my profits at 50% of the maximum, that means I'm going to wait until the price of these options falls down from 172 down to 86. So I'll change my limit price here to 0.86. And then I'll set this as a GTC order. And finally, confirm and send, there we go. So that's going to do it for my CLF trade here. And the one thing I'll have to keep an eye on, of course, going forward is if I am wrong on this position and if CLF continues to go lower, once it reaches my break-even price, at that time, I will begin to short shares of the stock, basically applying some brakes on the losses. And so specifically my break-even point, let's make this easy here. If my strike on these put options is 18 bucks, and I sold those put options for $1.72 on a per share basis, that means my break-even price is $16.28. So again, if I'm wrong on this trade directionally, and if CLF goes lower, and if it hits a price of $16.28, at that time I will begin to short the shares of stock. But of course, we'll cross that bridge if we ever get to it. Okay, so I'm back here again, still on Monday, May 24th, and my FCX trade just closed out for profits. Right, so this was a strangle I sold a little while back. I sold the 50 strike call option and the 39 strike put option, and did so for about 234 bucks in credit, and I sold 2 tranches of that strangle here. So given that the price of each strangle dropped in half down to 117 per strangle, that's when my GTC closing order kicked in and took these trades off for profits. So once again, I have some capital available to use for a new trade, and now I'm looking at SPCE again, or Virgin Galactic. Now, normally I'm a little bit hesitant on trading the stock because if I go to the trade tab here, it is hard to borrow. So that means if I were to sell put options on this stock and I needed to hedge that put option by shorting shares of stock, I might not be able to do so. But today is a bit of a special situation because if you go to the charts now, and I zoom in here a bit, you can see SPACE is up by over 17% today. And in fact, earlier it was up even more than that. And apparently the news is that they just had their 3rd successful test flight. That's great. I'm happy to see this company doing well, but at the same time, at least from my view, this is what they're supposed to be doing anyway, right? This is what this company does. It sends people and rockets into space. So again, I'm glad they're doing well. I'm glad they had their 3rd successful flight, but does that warrant the stock being up over 17% in one day? In my view, I don't think so. So very similar to my WDC trade, I'll come back to those charts real quick, and I'll zoom in here. And I'm specifically referring to the naked call option I sold recently after this big, huge up move here. And again, this was all from speculation about some new cryptocurrency, which might cause the demand for hard disk to increase, etc., etc. A lot of ifs, a lot of maybes, a lot of speculation. I didn't buy it, so I sold an out-of-the-money call option to get bearish on the stock, and then the very next day, boom, the stock went right back down. And so for SPACE here, similar situation, I do think this move higher is a bit ridiculous. And so I'm going to sell 2 out-of-the-money call options on this stock. And looking at the IV, the implied volatility, it has come down a bit since the peak recently, but it's still pretty elevated for the moment. The IV rank is 37%, IV percentile at 76, definitely very good. And I'm going to use the base of this little topping pattern right here as a potential resistance point. And this price level comes in right around 27 bucks per share or so, 27.5, let's say. So I'm going to sell an out-of-the-money call option above this point. And so again, just like my Western Digital naked call option trade, I'm hoping for a reversion here, basically a move back down lower. And since I'm selling a call option, and if I did need to hedge this position with stock, I would just have to buy the stock, and there's no issues with that. Now, of course, this also means I'm not going to be able to sell put options on this stock to take in additional credit if need be, so there is some more risk here than usual, but I still definitely do see some opportunity here. So let's go into the trade tab now. And once again, I'm back in the July expiration cycle. And real quick, I just want to check when earnings are for this stock. So actually, we'll go to the Analyze tab real quick. And in here, I'll just type in SPCE. And so there we go. We can see the next earnings date is on August 9th, well beyond the expiration date for these July options. So that's great. I don't have to worry about earnings at all here. And so I'm thinking about selling 2 of these 30 strike call options. Right now, they're trading for about 240 bucks a piece. So selling 2 of them, that would mean I would collect about 480 bucks in total credit. That's very nice. And the reason why these call options are trading for such a heavy premium is because there's a lot of call skew for this stock, right? Even the 25 strike call option, which is just ever so slightly out of the money at the moment, already has a delta of over 50. And generally speaking, when there is no skew of any sort, the at the money options should have a delta of exactly 50. So basically this means at the moment the options market are pricing in more risk to the upside. But given that I do like to be a contrarian and go against the herd, go against the majority of people who are currently buying call options right now, I'm going to step in and sell them. So I'll go ahead and click on the bid price for the 30 strike call option, go to 2 contracts, and I'll set the limit price to $2.40 on a per share basis, and then go to confirm and send, check out the buying power effect. So in total, just under $1,000 in buying power, that's fine, and then go to send. And there we go, it just got filled at $2.40 exactly. So now I'm in this trade. And so now the last step is to once again set up my good to cancel profit taking orders. So now I'll click on the asking price and we'll go to buy 2 contracts. And if I sold these contracts initially for $240, that means once they drop down to a price of $120, exactly half of that, I'll buy them back. And then finally change this order to a GTC order, confirm and send, there we go. Okay, so today is Thursday, May 27th, and what you're seeing here is a price action chart of TAL Education Group. And this is a Chinese company that provides tutoring services for students. And as you can see, as of late, this stock has been absolutely slaughtered, right? It came from a high of just under 91 bucks per share, all the way down to a low of around 34 bucks per share. And along with that massive down move, you are seeing a pretty massive spike in implied volatility as well. And it has come down a bit since the peak of implied volatility and the bottom of this down move here, at least so far. And I'll zoom in a bit more. Right, so basically when the stock made a bottom at just over 34 bucks per share, that's when the implied volatility hit its highest value of just over 100%. So now that the stock seems to be stabilizing a bit, that's why implied volatility has come down for the moment. Of course, this could continue further down, no one knows. But at this point, I'm definitely ready to start selling some put options and trying to play for a reversion, right? Even if there's a short-term bounce in TAL, that directional move combined with a further contraction in implied volatility should be enough to make full profits and then get out. Moreover, I did do a bit of research on this company just to see if I could find any serious reasons as to why this sell-off occurred, like any scandals within the company or bankruptcy, things like that. I could not find anything of that nature. Right, Chinese stocks in general, at least recently, have been smacked down pretty hard across the board, and I think TAL just got caught up in the mix. And this company in particular definitely got smacked harder than most. And also, if I zoom out a bit here now, this is basically a 5-year daily chart. And so if we take a look at this time frame in here, basically going back to February and March of 2019, I think at this point the stock has reached a level of support. Right, if you follow this horizontal line all the way back to 2019, you can definitely see in here, specifically around this level or so, around 33, 34 bucks per share. I do feel like there is some significant port around this area. Of course, I could be wrong. The stock can definitely push even lower, but typically when I'm looking to sell put options, I like to wait until the stock has reached a significant support area and then also wait to see what the stock does once it reaches that level. So now if we scroll all the way to the right, to the current day, you can see that TAL hit that support level around 34 bucks per share, and then the following day it bounced off that, and it has been drifting a bit lower since then. But like I said, at this point, I do feel comfortable enough to start selling put options on this stock. And moreover, one last thing I want to mention here is that this stock does not even have earnings until July 29th, which is after the July expiration cycle. So I can sell options on this stock without having to worry about earnings announcements. So finally, we'll come over to the trade tab here. And as you can see, I'm already looking at the July expiration cycle. These options expire in about 50 days, or exactly 50 days. And I was toying with the idea of selling a bullish strangle, perhaps the 35 strike put option and the 50 strike call option. But I decided against this because the stock has simply gone down so far, and I don't mind being very, very bullish here. So I'm just going to sell the 35 strike puts, and I'm going to sell 2 contracts. So I'll click on the bid price here, brings up a sell order. We'll go to 2 contracts, and the bid and ask spread is 20 cents wide, so going right in between. I'll set the limit price at $2.30. Go to confirm and send, buying power effect is 2,300 bucks, which is less than 5% of my account value, so that checks out. That's fine. And actually, before I hit send, I do just want to double check that this stock is easy to borrow, right? Because when you sell put options, if you want to hedge a naked put option, you're going to have to short shares of stock, meaning you're going to have to borrow those shares first and then sell them. So of course, if the stock is easy to borrow, there's nothing to worry about, at least usually, right? Just a precaution, just because you see easy to borrow here does not mean that when you need to borrow the shares to short them, that you're going to be guaranteed to be able to borrow the shares. You will most likely be able to borrow them, but it's not guaranteed. So one other thing you can do to make sure that you have the highest chance possible to be able to short the shares when you need to is by taking a look at the volume of the stock. Right at this point, the market has only been open for about an hour and a half, and over 3 million shares have already been traded. And this is what I like to look for. I generally like to see the stock being traded a few million times, at minimum over one day, but at least during the morning hours, seeing that this stock is already traded over 3 million shares, that's definitely a good sign. So everything checks out here, and I'll go to send. And looks like I have not gotten filled yet, so we'll go back to the monitor tab and take a look as to why. So I'll scroll down here, and there we go. You can see my order. My price is $230, but the current trading price has just dropped to $225. So let's go to cancel and replace. I'll come down to $225, confirm and send. And there we go. Just got filled at $225. Very nice. So now I'm officially in this trade on TAL. And final step would be to set up the automatic closing order to book my profits if I am correct on this trade. So come down here, go to 2 contracts, and half of 225 is 112, but I'll come down to 110 just to make it an even round number here. And then we'll change this order to a GTC order, and finally confirm and send. There we go. So at this point, I'm all set, but if TAL does start to sell off even further, and it goes through my put strike here, I'm going to wait until the stock reaches my break-even point before I begin to short shares of the stock. Okay, so I hope you enjoyed those clips, and one trade I was not able to record was my strangle on Roblox here. The reason being is I made this trade basically in the last few minutes of the trading day, I believe on Wednesday, and I just could not get the recording stuff set up in time. But basically, if we go to the charts now, we'll take a look at RBLX, and you can ignore these alerts right here. But for this trade, I sold the 110 strike call option and also the 70 strike put option way down here. So a very nice wide range for the stock to move around. And as you can tell, this stock has not been around for very long. Right? This company IPO'd back in March of this year. And for the most part, it's just been trading sideways. And it wasn't until recently that the stock started to really take off. So for the strangle here, my idea was simply to take advantage of the high implied volatility down here. And I definitely am bearish on this stock, but I did not want to sell a naked call option by itself because there is no resistance anywhere above this point, right? The stock is basically making new highs almost every day. So that's why I went with a bearish skewed strangle. So besides that, not much more to say about this trade. And for right now, it's definitely not going too well. I'm currently down by almost 200 bucks, but there's still plenty of time until the July expiration cycle, and my options are nowhere near being in the money at this time. I still also have my WDC strangle on. It is getting very close to my profit target, and you can see the order right here. I'm waiting for the strangle to drop in price down to $1.45 on a per share basis, and it's currently sitting at $1.51, so a few more dollars more, and I'll be able to take this one off for a profit. As for Palantir, this stock has definitely become an issue pretty much in the past 2 days. Right, this trade went from being a pretty nice winner, although it didn't hit my profit target, all the way to a pretty nasty loss, at least for the present moment. And this stock, along with Virgin Galactic, are the 2 stocks where I had to purchase shares of the stock this morning. Right, my break-even points on the call side for both of these strangles already got breached, and so as a result, I had no choice but to start buying shares of the stock. So for Palantir, let's look at the charts real fast, and I'll zoom in. So my break-even point on this stock was at $23.20, right around there. And as you can see right now, the stock is currently at $23.52. So obviously not ideal, but you just got to stay mechanical and consistent. This trade still could be a full winner by the expiration date, which at this point, because this is a June expiration cycle, that's coming in 3 weeks exactly. So there's not that much time left for these options. And of course, anything can happen, but like I said, there's still a chance for a full profit on this trade. But now when it comes to Virgin Galactic, my favorite stock ever, right? This one has pretty much gone into the worst case scenario almost immediately. Right, almost the day after I put on this trade, the stock blew through my call strike, blew through my break-even points, and also implied volatility expanded. And I've already had to buy 2 rounds of shares for Virgin Galactic, 2 rounds of 50 shares apiece. And then, of course, the stock whipsawed me and went back down very quickly, and I had to sell some shares and take some losses. So far, this has been a pretty terrible trade. That being said, there is still potential, just like Palantir, for this trade to be a full winner by the expiration date. It's not over yet. And even though I'm definitely not happy about this trade right now, I am happy that I get to show this to you guys because this demonstrates, one, you will certainly have trades that move against you very, very quickly and very, very badly. That's just part of the game. And then two, it emphasizes how important it is to keep your trade size very, very small. Right, as you recall, I sold only 2 call options on this stock. And the buying power effect, the amount of capital I had to set aside to sell those call options, was around 2 or 3% of my entire account value. Very, very small. And because of that fact, even though yes, the losses are pretty nasty at the moment, they're not catastrophic. I'm not forced to close this position because I got a margin call or because I got scared out of the trade, etc., etc. Instead, I can manage this trade, stay mechanical, make adjustments, and potentially by the expiration date or sooner, I might have the ability to walk away from this trade either with a profit or a scratch, or just a much smaller loss. Right? The worst situation you can be in is when you make a trade, it moves against you, and then you have to close that trade at the worst possible moment, when the losses are at the greatest. So we'll just wait and see. There's still plenty of time left to go until the expiration date, and I will manage this trade as best I can to turn it around if possible. But there is still some good news here. If you look at my naked put strategies, my recent trade on TAL is going well so far. I'm up about $35 today, or $35 overall, I should say. And for my CLF trade, it's going very, very well. And in fact, if we go to the charts for CLF, you can see that trend line I drew held perfectly. Right? The stock just touched it and then immediately bounced right off it. Does this always work? Of course not. But from my experience at least, I would say that when you can identify major support levels or resistance points, major trend lines like this, etc., this kind of analysis in particular does work more often than it does not work. Whatever you can do to put the odds in your favor to give you a greater chance of turning a profit, that's what you want to pursue. So finally here, I'm going to take a brief moment to see if there's any new stocks that I want to place trades on, although I'm definitely not very keen to do so because I already have 6 positions on at the moment, and there are also some big earnings announcements coming up in the next 2 weeks. But still, we'll go to the Market Watch tab and I'll take a look here, and I'll come back once I have or have not found anything. Okay, so I'm back here, and I was thinking about potentially selling some calls on BlackBerry here, right? Because along with Virgin Galactic and AMC and GameStop and a few others, this one also is going up at a pretty ridiculous pace. And along with that, you're seeing a huge explosion in implied volatility as well. That being said, I'm not going to do this because one, the stock does have earnings in the month of June, which is obviously during the July expiration cycle. So that's one red flag. And then also, I just don't need a second meme stock in my portfolio right now. I've already got my hands full with Virgin Galactic. I don't need to add a second one, right? Because if I do sell some calls and if come next week the stock continues even higher, that's just going to add even more pain on top of what I'm already dealing with. And there's definitely no way in hell I'm going to be selling put options on the stock when it's already up almost 13% just today. That's basically against my religion. I don't do that. So I'm going to hold off on making any new trades today, but I'm thinking about taking off my Western Digital trade a bit early, only $6 early, or about $5 early, just because it is so close to my profit target, and I would like a small win today amongst all this pretty nasty losses. So let's go ahead and cancel and replace this order. And the current price, I believe, is 151, so I'll go to 152, confirm and send, and didn't get filled yet, so I'll come up $1 more. So once again, cancel and replace. I'll go to 153, confirm and send, and there we go. So I took my profits there, $8 early, definitely not a big deal. And if you come back to the charts real quick, you can see implied volatility for the stock has absolutely collapsed. So there really is no point in holding that trade much longer anyway. And also, like I said, when you're having a pretty bad day like this, it's nice to take off a few winners if you can, just to help lessen the pain a little bit. And so that's going to wrap it up for today's video. I hope you enjoyed it. And please let me know your thoughts or if you've got questions in the comment section below. And don't forget, if you want to take some very in-depth classes on options trading and stock market investing, then check out those Skillshare courses. Links in the description of this video. And finally, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every Monday, Wednesday, and Friday, and you don't want to miss out. So thanks again for watching, and I'll see you next time.